All right. Hello, guys. Welcome to our first homework support as a group. My name is T.I. Kenderson, and today we're going to be working in Chapter 3, Exercise 3-5. If you have the paper textbook, you can open up to page 145, I believe, if you want to follow along, but there's not a whole lot to follow along with in here. So let's just jump right in. So exercise 3-5, the tabular analysis of transactions for Wolf Company is presented in exercise 3-4. We'll go there in just a second. Instructions: prepare an income statement and a retained earnings statement for August and a classified balance sheet at August 31st, 2017. All right, if you already read the chapter, you should be fairly familiar with the tabular analysis. It shows how cash flows through the company for a given period of time. For all intents and purposes, we'll actually be in Excel for the remainder of this. So this tabular analysis, I've actually copied over here into Excel. And let's get started. So first, all we need to do is to tally up each of these accounts. So starting with cash, if you take your calculator, and you're welcome to follow along. What we're going to be doing is we're going to be taking the first transaction, which is $20,000. We got that from common stock, by the way, by issuing $20,000 of common stock. And we will be subtracting it by 1,000 for a transaction for equipment. We're going to be subtracting $750 for supplies. We're going to be adding $4,100. That comes from a service revenue that we've done. We're going to be subtracting $1,500. We're going to be subtracting $2,000 because we paid dividends. We're going to be subtracting $800. We're going to be adding $450. And finally, we're going to be subtracting $3,000. Now, this tabular analysis has over on the right a couple notes on what each of these transactions are. Please look at those so that way you're not lost on what each of these transactions were. So if you put those all into your calculator correctly, you should have come up with $15,500 for the cash account. All right, next we move on to accounts receivable. And this will be much easier since we don't have a ton of numbers. What we have is $5,400. This came also from service revenue, which means that they paid some of it and plan on paying the rest later. And later on, subtracting it from $450. I'm guessing that that is when the client eventually paid up some of it. So if you, once again, take the $5,400 from the earlier transaction, subtract it by the $450, you should get $4,950. Supplies is straightforward. There's only one transaction that includes supplies. So we're just going to move it on down here, $750. Same thing with equipment. It'll be $5,000 in that account. So right there, we've completed all of our assets. Let's move on to liabilities. Under our accounts payable account, we have $4,000. It looks like that is part of a loan that Wolf Company took out for the equipment. We subtract from that $1,500. Looks like that transaction was paying off part of that equipment loan. And finally, adding $300 as it appears that we paid for utilities on account. So once again, that's $4,000. Subtract $1,500 plus $300. Following along your calculator, you should be getting $2,800. And that finishes up liabilities. On to stockholders' equity. There was only one account there was only one transaction that included the account common stock, so we'll include 20,000. Same thing with revenues. There was only one transaction where service revenue was recorded, so that is 9,500. Our expenses must be totaled up, so we have minus 800, minus 3,000, and minus 300 for rent, salaries, and utilities, respectively. If you add those together, you should get negative $4,100. And our final account, dividends, only one transaction included dividends, and so that'll be minus $2,000. All right, there we go. We've now done all that we need to do for our tabular analysis. Let's move on to our income statement. Now, first thing we need to do with our income statement is date it. So the income statements are always for the period ending the said date, which is August 31st, 2017. We start off by including our revenues first. We include our service revenues, which if we come back here to the tabular analysis, we can see that our service revenues is $9,500. Next, we record our expenses. First, we will record our salaries and wages expense, which is over here at $3,000. Next, our rent expense, which on the tabular analysis was $800. And finally, our utilities expense, which totaled $300. This gives us our total expenses of $4,100. Now that we know our service revenue and our total expenses, we can subtract our expenses from our revenues to get our net income, which is $5,400. There we go. Now we've completed our income statement. Let's move on to our retained earnings statement. The retained earnings statement is dated the same way as a period ending, in this case, August 31st, 2017. We include our net income first from our income statement, which is $5,400. And if you recall from our tabular analysis, we paid dividends, so that needs to be included in our retained earnings statement. So we will be taking away dividends, so we will be writing down less dividends. And that was for $2,000. By taking the $5,400 and subtracting it by the dividends, that will give us our retained earnings of $3,400. With that, we are ready to move on to our balance sheet. If you recall, balance sheets are dated differently. Instead of a period, they are an ending date. So all we need to put is August 31st, 2017. Now we need to start with our assets. If you recall, assets need to be recorded in order of liquidity. So we will be including our cash first. From our tabular analysis, we know that our cash account is at $15,500. So let's include that in our balance sheet. Next, we work with accounts receivable, which once again, we come over here to our tabular analysis, $4,950. Next, we will be using our supplies. We will be putting in our supplies account, and that comes out to $750. Once again, that is from our tabular analysis. And finally, our equipment account, which is totaling at $5,000. Once again, we get this number from our tabular analysis. By adding all those up together, that would be 15,500 plus 4,950 plus 750 plus 5,000. That will give us our total assets of $26,200. Next, we move on to our liabilities. There was only one liabilities account, and that is accounts payable. At the end of the period, accounts payable was at $2,800. So we will put in our accounts payable, and we'll put those in at $2,800. Next, we need to record our stockholders' equity. First, we'll start off with common stock. Our common stock account over here in our tabular analysis was $20,000. So we need to put $20,000 on our balance sheet. Next, our retained earnings go in our stockholders' equity. And under our retained earnings statement, we found out that our retained earnings are $3,400. Now notice that I did not go back to the tabular analysis for this one. This one, I came to the retained earnings statement. Once again, that was $3,400. By adding together our common stock of $20,000 and our retained earnings of $3,400, that gives us our total stockholders' equity of $23,400. Now that we have our total stockholders' equity and our only liabilities account, by adding those together, we can get our total liabilities and stockholders' equity of $26,200. It is important to note that because of the accounting equation, assets will equal liabilities plus stockholders' equity. And that's what we have here of $26,200 in both on both sides of the equation. And that'll do it. That gives us our income statement, our retained earnings statement, and our balance sheet. Thanks for joining us. Thanks for joining me, guys. If you have any questions, please feel free to make a little post in our group. I'm available pretty much all the time. So if there's something specific that you don't want anyone else to see, you can give me a personal message. But chances are someone else has the exact same question as you, and we can work through this. If you have any other questions, I'd be willing to help you over Skype or through Google Hangouts. And with that, we'll wrap up. Thank you very much, guys.